over to something completely different, and spot prices for gold are up by over 12% over the past 12 months. So we have seen buying in the shiny metal. More than 8% of that growth has been coming since the beginning of this year. What's been driving gold higher, though? You can see spot gold here, 12-month performance chart for you, up by more than 12%, $689.70. But here for more is Rob McEwen, chairman from U.S. Gold. Hi, Rob.
Hello, Louisa.
How are you?
Excellent, thank you.
And you're a happy man at the moment when you glance at the gold price.
I'm going to be even happier when it goes higher.
Yeah, I figure that much. What do you think is driving the price of gold? And are we still seeing the same type of trades and the same type of gold holdings now as we typically do, or has that changed?
Gold was being driven by jewelry demand, and that's being replaced by investment demand right now. And you've gone from it just being a U.S. market, 300 million people, to a world market when in 2005, so you're 6 billion people, so 20 times more people are looking at gold. They're watching it going up and saying, I've never owned it, I don't know why I should own it, but it looks like it's going higher. And I think by the end of 2008 it'll be over 850, the old high, and by the end of 2010 it'll be north of $2,000.
Hold on, give me those numbers again. You said by the end of
2008.
Yeah, 2008.
It'll be testing 850, which was the high it achieved in 1980.
Yeah.
And by the end of 2010, it'll be north or higher than $2,000.
Those are some pretty hefty calls, Rob.
Well, I've been calling it since 250, back in 2001.
Yeah.
An earlier company I ran for 18 years, Gold Corp, which is New York listed. Yeah. We started withholding our gold with the belief that gold was going higher. We started holding gold, not selling it. We produced it but didn't sell it. Started at $270 an ounce. We owned more gold than the Bank of Canada. We were starting to encroach on the Bank of England, just with the belief that gold is moving, it's money, it's liquid. If you have a piece of real estate, you can't move it in 2 days. And we're moving into a market with a lot of financial inflation. You're seeing price escalation across the board, but you can't get out of it in 2 days. You can't get out of it in a month. And that's going to be a very important element going forward.
Do you think that, I mean, you started off by saying that we've maybe seen a slight shift in terms of how gold is traded, that it used to be down to, the jewelry demand, and now it's more kind of trader demand. But do you think gold still is being played as that typical inflation hedge, or is gold being played in other ways?
We're being told there isn't any inflation. But if you look at the price of petrol, or you look at the price of home, or even foodstuffs, it's coming into the system. Price increases are coming through. Jewelry demand for gold is often at the bottom of the cycle. And jewelry demand is quite price elastic. So the higher the price, the less demand for 24-karat gold. There's substitution for lower carats. And as that jewelry demand drops, the investment demand comes in. There are a number of people that are coming up that never talked about gold to me. And they're saying, could you sit down and talk about it for a while? Because they're saying, I should have some of this in my portfolio.
So tell me about your company. I mean, you founded Gold Corp, which now is the third largest gold producer. But how about U.S. Gold? U.S.
Gold is a small exploration company. Think of it like research and development. And we're spending money looking for a large deposit. I happen to have gone into Nevada, acquired a large land package, 150 square miles. We just completed a takeover of 3 other companies. And we're sandwiched, our property is sandwiched between the world's 2 largest gold producers, Newmont and Barrick. And right next door is a discovery, 33 million ounces of gold. And so we have a property that's quite large, is on the same geological structure. It's only been tested to 300 feet below surface, and we found 1.4 million ounces. And the discovery next door started at 600 and goes down to 2,000. So I raised 75 million last year and said, let's explore very aggressively for 3 years and see if we can find one of those 33 million ounce deposits next door. So
that's what you're heading towards now, is 3-year development in this particular area. But that's not the only area you're involved in either. I see Alaska as well. I see a couple of companies that you've participated in merging.
Since I stepped down from Gold Corp, I looked and said I want to be in the gold sector, and I started doing investments where I would own 20 to 30% of these public companies. And these are all companies, they have dreams. They hope to make a discovery. But in the exploration business, you can get, if you're lucky, it's like you make a discovery, it's like getting on a rocket. It just takes off, and you'll get it 10, 20, 30 times on your money. And that's the type of area that I'm looking at. The senior gold producers are proxies for gold. Their production is going down, their costs are going up, so they're being squeezed. Their margins are being squeezed. The intermediates are less of that, and the juniors will be the feedstock to provide the discoveries to the intermediates and juniors, and that's where you get the price movement. So I've chosen places, Alaska, Argentina, Nevada, where basically the same time zones, geopolitically reasonably stable, with good prospective areas for finding more large deposits.
Really interesting stuff. Glad you came in to spend a couple of minutes with us here on Power Lunch. Rob, do come back again and visit with us. Rob McEwen, Chairman for U.S. Gold. Now, I have a little treat for our viewers, and that treat is coming.